Good morning, class.
Good
morning, sir.
Good morning, sir.
Can you see my slide?
Yes, sir. Yes, we can see your screen, sir.
You can see it.
Yes, sir. You can see, sir.
Yes, sir.
You can see, sir.
I hope if we are not, anyone who is not able to join here, I've linked to YouTube so you can easily log in and it will take you to YouTube. So it will accommodate everybody. So once again, good morning. This morning.
Good morning, sir. Good morning, sir.
So this morning we shall be looking at fixed assets and depreciation accounting. So I want to employ every one of you, as the exam is moving fast approach, you should take time to read, study on your own. If there's anywhere you have been taught that you think you don't understand or you need further question, feel free to call me any time of the day, 24 hours of the day. Feel free to call and ask your questions. And if time permits us, the classes we have had online, if time permits us, we'll still have to repeat them physically. So just this 1 hour cannot accommodate everything that we need to teach. So if we have the time, we'll go through some of them. Or if possible, everything you have done online, we still look at them so that you have a solid foundation in accounting. Most of you, this admin accounting, there is no way you will not need what we are doing now in future in your career. So I'm appealing to you. The foundation is very, very key. So what you know today, you will put them to practice tomorrow. So wherever, be it the class I have taught or any of the other lecturers, where you are having issue, feel free to call and ask your question. I'll be glad to attend to it any time of the day, 24 hours of the day. Feel free to call. So this morning, I said we are looking at fixed assets and depreciation accounting. My usual style, who can tell us his understanding of the word fixed asset? Just raise up your hand. Let me recognize you and we'll talk about so Oluwasegun Thomas. What do you understand by fixed assets?
What I understand by fixed, good morning, sir.
Good morning.
What I understand by fixed asset is that it's an asset that is being fixed, that is not changing anytime soon.
That is being fixed, that is not changing anytime soon.
So it's like salary and
No. You have mixed it. But listen as we go on so that you have a better understanding. It's good to have your field so that we know what you know about what we are discussing. they will know how to give a proper explanation. Asuko Owoido Etsy. What do you understand by the word fixed asset? Good morning.
Okay, fixed assets, they are assets that grow immediately, such as machine factory that cannot be removed anywhere, that cannot be removed during the production. During
Cannot be what?
production. That cannot be removed during production. It's fixed like machine.
Your sound is
Let me
echoing. I'm finding it difficult to hear what you're saying. Finding it difficult. Okay, let's listen to Ismail Abdul Ismail Abdul can we listen to you?
Good morning, sir.
Good morning.
Fixed assets are assets that are not changing anytime soon.
That are not changing
anytime soon. That can't change anytime soon. They are assets that are fixed permanently.
Okay.
Though
Let me come in here. You do not have the good understanding of the word fixed asset. So every business that you are operating, especially those in the manufacturing sector or the production sector, they have equipment they use. And these are equipment that they use in the course of production. So this machine, when they are bought for use in the business, underline that word, for use in the production for the business, that has a longer time, that is not going to be exhausted in 1 year. That's what we mean by fixed asset. They are assets that the business will use in the course of its operation that lasts more than 1 year. That their usage goes beyond 1 accounting year. So the term fixed asset as used in accounting to describe asset of greater permanency, that is asset of longer life but do not last forever, acquired by a business for production rather than for resale to customer. Example are land, building, plant and machinery, equipment, motor vehicle, furniture, and fittings. There is no way you will not have furniture in your office, the machine you are using in your office, the motor vehicle in your office, and the building you use where you operate your business. All of these are what are fixed assets. They are assets that you use during the course of business. And mark this one, any asset that you have and is not for the purpose of the business, and it is not called what? It is not called fixed asset. Is that taken? Do you understand that now? Class.
Yes, sir. Yes.
They are
Yes, sir.
assets used for the purpose of the business. They are used to transcend 1 accounting year. Okay, let's take motor vehicle for instance. If you are buying motor vehicle for business use, you can't say at the end of 1 year, the motor vehicle will go. Except whereby, okay, there's fire accident, there's accident that will not make the vehicle to function again. When you buy a motor vehicle, you will use it for several years. Those are what we call fixed assets. Fixed assets. So let me give you the IFRS definition for fixed asset. Who can tell us what IFRS is? Anybody? What is IFRS? Ike Buazo. Do you want to respond to that?
Someone to respond to it.
Okay. What is
International
IFRS?
Financial Reporting Standard.
Fantastic. That's a good one. International Financial Reporting Standard. And what is it used for? What do we use IFRS for? Are you still talking? What do we use IFRS for?
Hi, sir.
Joy Okparugochukwu, can you tell us what IFRS is being used for?
Yes, sir.
Right, okay. IFRS.
Yeah, IFRS is
okay. I'm listening.
okay. Actually, the purpose is for the use is for like transparency and reliability of a particular product. I guess.
No. I mean,
Okay.
when we say international financial reporting standard, it is a standard that guides everything that we do in accounting. As an accountant, you cannot decide on your own, this is the way you want to run your account, this is the way you want to prepare it. There are standards that guides what we do. As it's the international financial reporting standard, it is a standard that is globally accepted for us to do what in the preparation of our financial report. That is it. So IFRS defines fixed assets as a resource controlled by the enterprises as a result of past events and from which future economic benefits are expected to flow to the enterprises. Let me explain that. Assets are resource or resources controlled. These are items that it is you have control over it. They are your resources, they are your items, they are your assets, and you have control over it. And as a result of past events, you have bought them in the past. You have spent money on them, but it is expected that it will be used for the purpose of the business to generate future economic benefits. So that is the definition of, if I'm asking in the exam, as IFRS define asset as, so you should be able to tell me that yes, a resource controlled by an enterprise as a result of past events from which future economic benefits are expected to flow into what? The enterprises. And what is the future economic benefit we are talking about? Future economic benefit that we are talking about, what is it? Happiness Williams, can you talk? What is this future economic benefit that we are talking about? You don't have an idea. Any other person who can weigh in on it?
Global consistency.
No. I said future
Hi,
economic. What's your name?
I want to ask something.
Okay, what is the future economic benefit we are talking about? You can speak. I'm waiting for you. Okay. Because of our time. The future economic benefit. Hello, you want to say something?
Yes, sir. Good morning.
Morning. Your name?
NSCVO, sir.
Vivo. What is the future
Yes,
economic benefit we are referring to?
The future economic benefits is the profits that the organization
That's
is
a very good
expected
one.
to get.
That's a very good one. Yes. The future economic benefit is the profit. The profit that will be generated as a result of the usage of that asset. So we have a lot to do this morning. So we'll be very fast about it. So let's look at features of fixed asset. What are the things that must be present for you to say this is a fixed asset? One, can you mute yourself, everybody? We have a lot to do this morning, and I don't want everybody to stop this class. Yeah. So when we talk about features of a fixed asset, before we say something is a fixed asset, what are the things that is expected that the asset must possess? It must be used in operation or production. I have told you, if you bought a motor vehicle for your own use, not for the business, you can't refer it as what? As fixed asset. It must be used for operation, for the purpose of what? Of the business. Another one is that it must have a useful life of more than one accounting year. If you buy anything that's okay, this thing by the end of this year or this accounting year, it will no more be used. You cannot refer to it as what? As fixed asset. If you bought a machine, if you buy a machine for use, definitely the machine will be used for more than 1 year in your business. These are the two features that an asset must possess before you refer to it as what? As fixed assets. Is that taking class?
Yes, sir.
Yes, sir.
Good.
Yes, sir.
So,
Yes, sir.
how do we determine the cost of a fixed asset? When we say something, okay, this particular item is a fixed asset, how do we determine the cost of such an asset? One, the cost of fixed assets should include all necessary costs to acquire and get them ready for use. Let's take motor vehicle, for instance. You are buying a motor vehicle for use in your organization. When you buy a motor vehicle, what are the things that you need to do before you are able to use the motor vehicle? Class, can you tell me, okay, you are buying this vehicle, what are the things that you need to do before the vehicle can be put to use? Happiness Williams, I see your hand up. Can you respond to that? Happiness Williams, can you unmute yourself and speak?
Good morning, sir.
Good morning.
My name is Tosin Balogun.
Okay.
Yeah. So, before the motor can be used, and you have to get your license ready, and you have to get road permit. You have to get all the documents intact before you can use the car.
Yes. So all these things put together before you can use the vehicle are part of the cost you use in it. For instance, let's look at building now. If you want to get a building for your office use, what are the things that you need to put into consideration before it can be used? A building. How do you determine the cost of a building that you've called fixed assets in the organization? Benga Samuel, you want to try? Okay. If there is no response to that, the legal field. If you want to buy a land to be where you want to build your building for your official purpose, you do not tell you need to get a lawyer to do the documentation, all of that. You need to do insurance of the building, everything that you need, the cost of building, the land, the engineer, everything that you spend in making the building to be ready for use. Those are the things you need to add, like the legal fee, carriage inward, insurance, installation expenses, and other costs that will make the assets work to be functional. All these, if you are buying a motor vehicle for 1 million and you need to pay insurance, carriage, and every other thing, all this money will be added together to form the cost of your asset. Is that taking class?
Yes, sir.
Okay,
yes,
sir. Let's look at an illustration.
Sir.
Let's look at this illustration. The purchase price of a mixer machine is 50,000. Less 5% discount, legal fee. Less 5% discount, legal fee of 5%. Carriage inward of 1,600. Installation expenses 1,200. Insurance 1,000. Who can tell me the cost of this mixer machine? Quickly calculate it and tell me the answer. And whoever gets it will get 2 marks for it. The purchase price of a mixer machine is 50,000, less 5% discount. Legal fee is 5%. Carriage inward 1,600. Installation expenses 1,200. Insurance 1,000. What is the cost of the mixer machine that will be posted to machine account? Class, whoever gets it will get 2 marks. If you have the answer, just unmute yourself and tell me your name and speak.
Good morning,
if you are not responding to this answer, can you drop your hand?
Good morning, sir. Good morning, sir.
Good morning. Your name?
My name is Anthony Chora.
Hi, your network is something else.
My name is Anthony Chora.
Can you allow someone else to speak? We can't hear you.
Good morning, sir. Good morning, sir.
Good morning,
sir.
My name is Jude Eze.
Jude, speak.
My name is Oshimade. The total, the price.
Oshimade, let's allow Jude to speak.
Good morning, sir.
The purchase price of the machine is 53,800.
What?
The purchase price for the machine is 53,800.
Okay. How do you determine it?
Sir,
Can you explain it?
Yes, sir. I less 5% from the 50,000.
Okay.
Then I added the legal fee, I added the installation fee, and lot of insurance to it, sir. So it's now total 800.
And your answer is what?
53,800.
53,800.
Yes, sir.
That's not correct.
Any
other person?
Good morning, sir.
What's
My name is
Good morning,
sir.
your name?
My name is
Good
Deborah.
Hello,
Sir,
class.
my answer for
My name is
Mr. Machine is 42,800.
Hello, class. Can you unmute yourself? I will call the person to speak. You are disrupting the class. Mute yourself, everybody, and raise your hand. I will call you. Mute yourself. I will call you so that you don't disrupt the class. If they do Gabriel, can you speak?
Good morning, sir.
Good morning.
Okay, sir. So for my calculation, the cost of it is going to be 50,000, then minus the
So just tell me the answer
discount.
first. Tell me the answer.
Oh, okay. That's 25. Okay, that should be around 50. 50. Jesus, coming.
What? Okay, to save our time, nobody gets my mark. So let's look at the solution.
Good morning, sir.
Good morning,
sir.
The solution is there now, so the mark is gone. So,
hello, sir. Hello, sir.
Can you mute yourself, everybody? Mute yourself. So the solution to the it is the cost of machine is what? 50,000. Less 5% discounts of 2,500. That will give us 47,500 plus the legal fee of 2,375. Carriage inward 1,600. Installation 1,200. Insurance 1,000. The total is on 53,675.
Hello, sir.
Hello.
Sir, we have
I thought the legal fee is 2,500.
That is what I have shown. Are you not seeing my slide?
Well, you said the legal fee is 2,375 naira.
The question,
the legal fee is not 2,500. It is 2,375 because the cost price is 4,700, which means that the 5% of the cost price, where some of us are calculating, you already have a 5% discount, so your cost price has reduced. So the legal fee will be 5% of the cost price, the new cost price, not the original cost price.
Yes, that's true. But was it?
Thank you for that. So as you
My
can
name
see,
is
this is
Israel.
the answer you are seeing on the board.
Hello, sir.
When you less the 2,005 to give you what? 47,500. It is the 47,500 that you now add every other cost. Is that taking?
Yes, sir.
So please, you need to study this because you have things like this coming up in your exam. You need to study it. We have a lot to do.
Hello,
Can
sir.
you speak? Hello,
sir. Good morning, sir.
Hello, class. Please, everybody mute yourself. If you want to ask questions, raise your hand virtually, and I will call you. Those of you that your hands are up and you are not talking, can you please drop them? Happiness William, do you have a question? No. Abolu Aduru Omosolani.
Good morning, sir.
Good morning.
Yeah, sir, please, I have a question on the insurance.
Yes.
I thought that the insurance is not supposed to be included unless it is directly related to transporting or installation of the machine.
No, the insurance is part of the cost for you to make it. I said the example I gave about motor vehicle, all of these are the costs that you incur before you are able to do what? Before you are able to use the motor vehicle. The same thing is applicable here. There are costs that you have incurred before the usage of the machine. It's part of the cost. So can you mute yourself and let's continue, please? Any other question on that?
Sorry, I have a question, sir.
Sir, please, I have a question.
What's your question?
Sir, you said that, I'm still talking about that the maths that you solved about that machinery mixer.
Yes.
You said, so in that 2.5 now, you took out 5% from it. Is that how we are going to calculate it if we encounter any problem like this?
Okay, let me give you another scenario. If the question, let me rephrase the question now. The purchase price of a mixer machine is 50,000. Less 5% discount. Legal fee 5,000. If the question says the purchase price of the mixer machine is 50,000, 5% discount will be given if payment is made between 2 ways. However, the purchaser made payment after 1 month. If you are given that clause in that question, how are you going to treat it?
Israelite, don't you speaking, sir? There's no more discount. So the answer will now be 50,000.
50,000. That is it. If you are not given any clause to it, you deduct the 5%. But if you do not pay within the limited time, and you will lose the 5% discount. That is the explanation. Is that clear? Okay, let's continue.
Hello, sir. Sorry, sir. Good morning, sir.
Good morning. Speak. Your name?
Yeah. My name is Adelerin Teniola. I think my question is also related to the previous person that asked the question now.
Okay.
But yes, regarding the less 5% VAT that was deducted from the legal fee.
Not VAT, discount. Because you are buying, when you go to buy things and it's okay, for buying this amount of money, we are giving you discount. The amount will be less from what you are going to pay.
Oh, okay. So you have to deduct the 5% also from the legal fee. Okay.
From the cost of the machine.
Okay. I think I understand now. Thank you, sir.
Okay, better. So let's move on, please. We still have a lot to do. So let's look at depreciation. Who can tell me his own understanding of the word depreciation? Anybody? If you are not answering, can you drop your hand?
Hello, sir.
Hello, sir.
If I don't call you, don't speak, please. Mute yourself.
Hello, sir.
Mute yourself. I have not called you, please. Mute yourself. Opeyemi Abolande, can you speak, please?
Good morning, sir.
Morning.
Depreciation means when the cost of good is not more the price is no longer increasing. That means it's dropping. The price is dropping down.
That's your own understanding of depreciation. Listen to what we are going to say. You didn't get it. Any other person?
Yes, sir.
Favor, can you speak?
Okay, sir. Hello, sir.
Good morning, sir.
Call Favor.
Hello,
I've not called you. Mute yourself, please.
Okay. Depreciation is a decrease in value of an asset over time.
Over time. That's partially correct. Let's listen to one more person. Sonny Saba. Sonny Saba.
Depreciation is the decrease in the value of asset and the method used to relocate or write down the cost of tangible asset.
You have all tried, but you did not get it. Listen to what I will explain now. Listen to it. Depreciation can be defined as the fall or decrease in the economic service potential of an asset as a result of what? Wear, tear, usage, obsolescence, and inadequacy. What do I mean? When you buy a motor vehicle, say for 10 million naira, at the end, and normally we usually depreciate motor vehicle for 4 years. That means you are deducting 25% every year. as you are using the vehicle will be depreciating, because from the day you started using it, you know, Nigerian road, go inside it's going through mud, a mud road and all of this. The value of the vehicle is depreciating. It's no more the same thing the way it is. That is why we say, as a result of usage, through wear, tears, and obsolescence, if you buy a motor vehicle and you are not using it and you just park it, and you are not using it for the purpose of the business, you cannot start depreciation on it. Depreciation is what is the decrease in the value of economic service potential. And when we now, somebody said, what is being charged? We now charge depreciation on an asset. And how do we do this? Listen to me, everybody. Let's take, for instance, a motor vehicle of 10 million naira. We are using it for business, and we are not charging anything. You know, the value of that motor vehicle is contributing to what? To the production of your business. So if you are not charging anything as a result of the value the motor vehicle is giving you, then your statement or financial report is not fair enough, because you'll be under-reporting your position, your financial position. The value that the vehicle has contributed should be part of the expenses you have incurred. You are just using the motor vehicle for business, definitely you are incurring some expenses, and the motor vehicle is still contributing to what you are doing. So you should be able to charge depreciation towards as your expenses. Is that clear, everybody? Do you understand what I've just explained?
Yes, sir.
Yes, sir.
Yes, sir.
That's a good one. So when you are asked what is depreciation, is the fall or decrease in the economic service potential of an asset.
It's not clear, sir.
If you buy a motor vehicle and you are not using it for business, you can't charge depreciation on it for the purpose of the business. So
Please come again, sir. Please come again, sir.
I've not come once now. Why are you asking me to come again?
Sorry about this, sir.
I said, when you buy a motor vehicle for the purpose of the business, let's say 10 million naira, and you have decided you are going to use that motor vehicle for 4 years, and every year you want to charge a particular percentage of the cost of the vehicle to add it to part of your expenses. So, you know, every year you are depreciating the value of that asset. But we'll see example now on how it is done. So the value, that vehicle you are using, the expenses on it to be charged into what? As part of your what? As part of your expenses for the year. Let's assume that your profits for the year is 50,000. 50,000. And you have not recognized the fact that that vehicle you are using, it is contributing to your business. It just at 50,000 without taking into consideration the depreciation on the motor vehicle. That means you are overstating your work, your profit, because you have not factored in the value of what the motor vehicle is doing to you. Let me say this too. We have agreed that you bought a motor vehicle for 10 million naira, and you are using the vehicle every year. For 4 years, you do not charge depreciation. If at the end of the 4 years, the vehicle is no more in use, it spoils, it cannot be used again, where do you get money to buy another one? You go and borrow money? No. As you are using the motor vehicle, you should be setting aside something every year, so that at the end of that 4 years, you will have gotten enough savings to buy another motor vehicle. Is that clear now?
Yes, sir.
It's very clear.
Yes, sir. It's clear.
It's very clear.
Okay, thank you. Let's look at the method of depreciating now. Depreciation method. 1, we have the straight line method. 2, reducing or diminishing balancing method. 3, sum of the digits method. And the last one, revaluation method. We are going to look at example of each of these methods before we call it a day. So let's go to the straight line method now. So the straight line method, this method allocates an equal portion of the cost of an asset to each accounting period in the estimated useful life of the asset. The amount of depreciation for each accounting year is determined by deducting the estimated or scrap value from the cost of the assets and dividing by the number of years of the estimated useful life. Let me explain this by saying, I just told you that we are getting a motor vehicle for 10 million naira for our business. Under straight line method, no, when you buy a motor vehicle and you have decided you want to use it for 4 years and you want to charge 4 years is the useful life value of that asset. The number of years we are going to use it is what we mean by useful life value. After the 4 years and you are deducting the same amount, does it mean that that vehicle you will throw it away? No. At the end of that vehicle, 4 years, the car you can still sell it at an amount. The amount that by which you can sell it, that is what we call that is the amount we call it the scrap value. So you deduct it from the value and you now divide it over time. Let's look at the question. Let's look at this illustration.
Baby, where's the water?
Auntie Rapper, you are disturbing us.
You don't know, you don't know.
Can imagine. A machine costs 56,000 naira with a residual value of 6,000 and a useful life of 5 years. You are required to calculate the depreciation for each year using the straight line method. Let me explain this. We have said a machine costs 56,000. The residual value is 6,000. Can somebody tell me what we are going to do with the cost of machine and residual value? Anybody? Just raise your hand, I will call you. Chinedu Gabriel. Can you explain what you are going to do?
So, residual value, from what I think I understand, is we're going to be minusing the 6,000 naira every year.
Every year. Okay, you have tried, but you didn't get it. Henry Okonkwo, can you explain what we are going to do with the 56,000 and 6,000?
We are going the formula to get to minus from these things, cost minus residual value all over years of useful life.
Fantastic. That is a good one. So you are going, when we say residual value, I just explained that you will deduct because that is the value you have at the end of the useful life of that asset. Your motor vehicle, if you have used it for 4 years, you can still sell it and you still get something on it. That's what we mean by the residual value. So in this case now, look at the solution. Annual depreciation charge is what? Cost minus residual value over the years of useful life. That is the 56,000 minus 6,000. You are not going to be deducting the 66,000 every year. You deduct it from the value of that asset, which is 56 minus 6 divided by the useful life value of that asset, which is 50,000 divided by what? 5 to give you 10,000. So that means your depreciation, you are going to charge what? 10,000 naira every year. You are going to charge 10,000 naira every year. When we come to physical class, we'll still go through this so that you understand how the posting will be from when you buy the asset, how you're going to do the depreciation, and how you're going to deduct it from your work, from your profit, charge it in your statement of financial performance. So, but for the purpose of this class, we'll not be able to go through all of that because we will not finish in 1 hour. So, but how to calculate the depreciation is what we are showing here today. So, cost minus residual value over years of useful life, which is 56,000 minus 6,000 over 5,000. It will give us 50,000 divided by 5. That is 10,000. So, every year, you are going to charge 5,000. You are going to charge 10,000 as what? As depreciation. So at the end of that 5 years, you will have saved enough money. Because this depreciation you are doing, you know, it is a non-cash movement. Because you are not taking it out, it remains in your account. It is a form of saving that at the end of that 5 years, you can say use the money to buy another machine. Do you have a better understanding of what we are talking?
Yes, sir. Very
It's
clear,
very
sir.
clear.
Fantastic. So let's look at another method. Let's look at, so this 10,000 naira is you will charge in your profit and loss every year. You charge it in your profit and loss every year. Okay, let me ask this question, and I want one intelligent person to answer me. Can you give me one of the reasons where the amount you have in your statement of financial position as the balance, bank balance, is different from what you have in your bank? In your financial, in your account, in your statement of account at the end of the year, you have 50,000 naira. But in your bank, you are having 10,000 naira. You are having 60,000 naira. What necessitates the difference? Anybody, raise up your hand and let me call you. Akinu Tolumide, can you explain that? No. Ismail Ishola?
6,000 naira, sir.
No, you didn't get my question. I said, when you prepare your account at the end of the year, your account is telling us that yes, the balance, your balance we have in your account is 50,000. But in your account, in the bank, in your bank, what you have as physical cash in the bank is worth 60,000. What necessitates the difference?
Residual value.
Residual value. You are not getting it. Just listen, you have an understanding. Who can try again?
No, sir. Can I
Samuel.
You get the question. Can you elaborate on the question?
Okay. Let me listen, everybody.
6,000, 10,000 also.
Listen, everybody. I said, when you prepare your account, at the end of the year, your account is telling us that yes, you have made a profit of 50,000. But in the bank, when you now go to your bank, you're asking for your balance, and your bank is telling you that yes, you have 60,000 naira balance in their bank account. What has caused the difference of that 10,000 naira?
The difference.
Yes. What has caused the difference?
It's 5 years now.
Can I answer, sir?
Oh yeah, come on, speak.
The useful life is 5 years.
No, just listen. I don't expect you to talk if I did not call you. Hello, speak.
Okay, I think it's the depreciation, sir.
Life is 5 years now.
Hello, mute yourself, everybody, and listen to me. Just mute yourself and listen to me. The 10,000 naira you have charged for depreciation, it is a non-cash movement. It does not involve movement of cash. You have only charged that amount. You know, you will pay for rent, you will pay for insurance, you will pay salary, you will pay for fuel, you pay for electricity. Those money they involve movement of cash. But the amount you charge on your depreciation, that 10,000 naira, who are you going to give it to? Is there depreciation somewhere that will collect it? No. The money remains in your account. Despite the fact that you have deducted it from your profit, but the money still remains in your account because it is a non-cash movement item. So you are saving the 10,000 naira to the future time whereby you will accumulate it to get another machine. We call it non-cash movement item. You will pay when you pay electricity. Who do you give it to? You give it to a PACN. When you pay salary, who do you give it to? You give it to your staff. But depreciation, you are not giving it to anybody. It remains in your account. That is why you have a difference between what you have in your account and what you have in your bank. I hope that is well understood.
Yes, sir.
Let's go ahead.
Yes, sir.
Come again.
Okay, let's look at
it's clear.
Yes, let's look at diminishing stroke reducing balance method. When we say reducing balance method, that means, as the name suggests, we are reducing the balance all every time. Reducing balance. This method is often called accelerated depreciation method because it results in decreasing depreciation over the useful life of the asset, and there is no scrap value. Depreciation is determined by a fixed rate percentage written off book value of the assets every year. Let me explain this. If your organization, when we are doing accounting concept and convention, we talked about what consistency. And one of the things we mentioned was depreciation. Any policy, depreciation policy your organization has adopted, you have to be what consistent it is. If you are adopting straight line method, you stick to straight line method. If you are adopting reducing balance method, stick to reducing balance method. That is what we mean by that is a policy, depreciation policy, we call it. So we have talked about straight line method. In straight line method, the same amount of money will be charged every year over the useful life value of the asset. But in reducing balance, the same amount of money will not be charged, but the same percentage will be charged over the useful life of the asset. Let's look at illustration for you to have a better understanding. So, a machine was bought on January 20, 2006 for 30,000, but this was depreciated every year at the rate of 20% by diminishing balance method. You are required to calculate the depreciation using diminishing method and make necessary entry for the first 3 years. So let's look at the solution for you to have a better understanding. So January 2006, the cost of machine is how much? 30,000. How much is the percentage we are going to depreciate every year? 20%. So you will say that 20% of 6,000 of 30,000 is what? 6,000. That is the 6,000 you are going to recognize in the first year as your what? As your depreciation. Remember that anything, when you have a value as at December 31st, you will bring it down to the following year. What you have in December 31st, 2006 is good as what we are saying January 1st, 2007. Do you agree with that, class?
Yes, sir.
Yes, sir.
Yes.
So the value we have at 31st December 2006 is still the same thing we have in what? January 1st, 2007. So at the end of 2006, our depreciation value is what? 6,000. 20% of 30,000 is 6,000. So the net book value of our assets as at the end of the year is what? 24,000. For the following year now, 2007, class, you are disturbing us. I will throw the person out of the class and I won't warn you again. We still have a lot to do and our time is fast spent. So the following year, you still charge 20% on the reducing balance. That is what we mean. At the first year, the value of the asset is 30,000. When you deduct depreciation, what you have what? 24,000. It is from this 24,000 that you charge another 20%. 20% of 24,000 is what? 4,800. So as at December 31st, 2007, the value of the asset remains what? 19,200. You agree with me that what we have at 31st December is the same thing we have at 1st January 2008. Had it been in the physical class, I would have been able to do all of that, but because of our time and space now. So as at December 2008, what we are going to have is what? We depreciate by saying 20% deducted from what we have in January 1st, 2008, which will be 20% of what? 19,200 to give us 3,840. So as at December 2008, the value of that asset remains 15,360. Do you understand what I have done here, class?
Yes, sir.
It's very clear. Fine.
Yeah.
This is what we mean by what?
Yes, sir. Very clear.
It's very clear.
Yes,
Is
sir.
it?
Sir, please, I have a question.
It's clear.
Yes,
Fine.
Yes, sir.
So this is
Not clear.
this is what we mean by reducing balance. Every year when you charge your depreciation, the value of the asset reduces. Okay. And somebody tell me what is going to be our depreciation for 2009? Can somebody tell me what's going to be our depreciation for 2009?
Yeah, that is
that will be 20%. 20% of
That would be
15,360.
Somebody is talking. Can you allow somebody to just speak, please?
That will be 20% of 15,360.
And that will be how much?
That will be
12,000.
No, that will be 2,000. No, 20% of
3,072.
3,072. The depreciation charge for that year was 3,072. 3072. So that is how to go about it. That is how to go about diminishing or reducing balance method. I hope that is clear. So let's look at some of the digits now. Some of the digits method. In this method, all the useful years of the assets are termed digits. The digits are added together. Sum of the digits is used to divide the depreciable cost of the assets. The result is that the first year has the highest depreciation, while the lesser amounts are charged in the later year. What are we talking here? If the value of the asset is 5 years, you will add from year 1, add it to 2, add it to 3, add it to 4, add it to 5. The sum of all that digits will now be used to divide from year 1. So the year 1 now, you now allocate to it a higher percentage. Let's look at an example for you to have a better understanding of what we are saying. Class, I hope you are understanding what we are doing this morning.
Yes, sir.
Yes, sir.
Yes, sir. Yes, sir.
It's okay.
Let's look at illustration for some of the digits now. Assume that the sum of the year digits method is used to depreciate a machine costing 66,000 with a residual value of 6,000. The estimated useful life is 5 years. Calculate and show the depreciation charged against profits at the end of each year and the balance sheet value of the machine for each of the 5 years. So what would happen? 66,000 naira is the cost and the residual value is 6,000. What are we going to do? Somebody should just raise up his hand and tell me what we are going to do with the 66,000 and 6,000.
To remove
Miss Clinton. Miss Clinton.
Yes.
Okay, sir. We're going to deduct the machine cost minus the residual value.
Fantastic. That is their way to go about it. Let's look at the solution now. Because our time is fast spent, we have about 5 minutes left. So in year 1, we have year 1, 2, 3, 4, and 5. We have deducted 6,000 from the 66,000 to have 60,000. So for year 1, when you add 1 plus 2 plus 3 plus 4 plus 5, what is it going to give you? You have 15. 1 plus 2 plus 3 plus 4 plus 5. You have what? You have 15. So for the first year, you now say 5 divided by 15 times 60,000. To give you what? To give you 20,000. For the second year, you say 4 divided by 15 times 60,000 to give you 16,000. That is the amount you are going to charge in depreciation in each of those years. And for the 5th year, you have 1 over 15 times 60. It will give you what? 4,000. That is the amount you charge for depreciation in each of these years. I hope you understand what we mean by some of the digits method now, class.
No, sir.
Please, how do you
get 15.
No, sir, we don't understand.
When everybody is talking, I won't hear you and I will move.
Please,
Raise up your hand and let me call you so that you won't disrupt the class. Christiana Moneke. Christian Moneke. You are not talking. Believe in God. Can you ask your question?
Sorry, sir. I didn't get how we got
somewhat confusing.
How we get what?
How we got the 15, like the 15 that we are using to
just
divide the
answer this question now. 1 plus 2.
1 plus 2, 3.
1 plus 2.
3.
3 plus 3.
6.
6 plus 4.
10.
10 plus 5.
Okay, 15. Okay, that's how we got the 15.
Yeah,
thank you,
that's
sir.
how we got the 15. Then you now take it from the last one. That is the one we charge first. 15 over 5 times 60,000 will give you 20,000. Is it clear now?
Sir, yes, sir. Thank you, sir.
How do you get that calculation? The 1 plus 1, 2 plus 2, 3 plus 3. How do you get calculation, sir?
Yeah,
How do you get?
1 plus 2 is
Look at the year.
Look at
year.
the year.
Years.
Look at the year. You have from year 1 to year 5.
4,
You have been told that the asset will have useful life value of 5 years. That is how you get your 1, 2, 3, 4, 5. Add from 1 to 5, you get 15.
Okay, sir. Okay, sir. Yes, sir.
Okay. So, and you can see the balance sheet will not be recorded. Cost is worth 60,000 minus depreciation 20,000 to give you 46,000 as the net book value. For the second year, 60,000. You add depreciation of year 1 to that of year 2. You understand? Year 2 is worth 16,000. 16 plus 20 will give you 36. 36 minus 60 to give you 30. For year 3, you add what? The 12,000 plus what? Plus 36 to give you what? 48,000. 48 minus 60 to give you 18,000. That is how you are going to do it. So let's move on to the last one now because of our time. Good morning.
Good morning, sir.
Your question.
My name is Emmanuel Archibon. Please, sorry, sir. I want you to do a bit recap about the depreciation because I was actually in YouTube. I was watching through YouTube. I was not able to join the pre-session. I want you to just make a bit recap about it. Please,
Of which one?
The method of depreciation and the number, the meaning. Talk about that. Define the 4 degree or something.
They are taking us by. I will send
Please,
the
sir.
slide and the recording. You will get it. We have less than about 2 minutes to the end of the class. I will send the recording of this so that you can listen to it and you have a better understanding.
God bless
if
you,
you
sir.
do not understand, call me and I will explain again. Is that taking?
Yes, sir. Yes, sir. God bless you, sir. Thank you, sir.
Let's look at the revaluation method. Let's look at the revaluation method. This method is used for valuation of an asset at the beginning and at the end of the year to determine its appreciable and depreciable value. The difference between the present value of an asset and its value at the beginning of the trading year is the cost of depreciation. The valuation method is used for such assets as copyright, loose tools, patents, etc. These are what they are assets that are not tangible, that you cannot feel. You understand? You cannot feel their assets to the organization, but you cannot feel them. That is how we do what we'll charge their depreciation. Let's look at illustration quickly. A company loose tool account was valued at what? 11,500 on January 2009. Additional tools of 2007 was purchased during the year. The stock of loose tool was valued at 11,350. Prepare the loose tool account using the valuation method of depreciation. Let's look at the solution because of our time is fast spent. So we are told that the opening value of that loose tool is what? 11,500. Add the purchase during the year, which is 2007. The new value of the total tool is what? 14,200. Less the closing stock value of the item now, 11,350. Our depreciation is what? The difference between the beginning and the end is what? 2008. So in this, we call them intangible assets because you cannot feel them. We are only comparing the value at the beginning of the year and the value at the end of the year. The difference is your what? Is your depreciation. If I have the value of an asset to be 100,000 at the beginning of the year, and at the end of the year, the value of the asset is now 75,000, sorry. The value at the beginning is 100,000. The value at the end is 75,000. What is our depreciation class?
25,000.
25,000. So this revaluation method is just to compare what you have at the beginning, any addition, add it to what you have, and deduct it from what you have at the closing. That is your depreciation. Any question on that?
Sir, please, I have a question.
Ask.
Sir, like which method is the best method to be using? Like the
So
best
that's
method.
why I say policy. It depends on the policy the organization is adopting. No one method is better than the other. Huh?
Okay. But I think that straight line method is more preferable because it's actually hard to understand.
It depends on the what is it called now? On the policy.
Okay. Thank you, sir.
Please, I have a question now.
Ask your question.
Depends on the company policy.
Okay, I'm still confused about how you got that 15. Sorry, I'm still confused about it, please.
No problem. I'll take you there.
Let me answer her, sir.
Oh, yeah, answer.
Hello, sir.
Hello.
Okay. Hello, sir. Good morning, sir. Let me answer her.
Okay.
Sister, you can look at the years. The number that is under that year, there's 1, 2, 3, 4, 5. When you add it up, it's 15. 1 plus 2, 3. 3 plus 3, 6. 6 plus 4, 10. 10 plus 5, 15. That's how they got it.
Fantastic.
Okay. Thank you.
So, any other question?
Hello, sir.
Yes, I have a question. Sir,
ask your question.
What meaning of IFRS?
Sir,
if you are talking together, they say barbarian, and you are not barbarian. Speak one after the other. Our time is spent already.
Okay,
sir. What meaning of IFRS?
International Financial Reporting Standard.
Okay, sir. Yes, standard. Sir, please,
Okay.
I want to understand all this depreciation method. Are they going to result to one answer, or are they giving different answers?
No. And they will give you different answers.
Okay, no problem, sir.
Different answer. That's why we say depending on the policy. And we say when we talk about consistency concept, whichever method you have adopted, you have to be consistent with it. That's the method you use all through. So that is our class for today. I hope you enjoyed the class.
Yes, sir. Thank you.
Thank you so much.
If you have any question, you can still call me for better explanation. Our time is spent. That's where we are going to end the class today. I wish you a wonderful weekend.
Hello, sir.
Thank you very much.
Thank you, sir.
Hello, sir.
Your phone number.
My phone number 080 23 358 387. Again, 080 23 358 387. So, have a wonderful time.
Hello, sir. Good morning, sir. Hello, sir.
God bless you.
Okay.
Hello, sir.
Hello.
Good morning, sir. My name is Atoyin, sir.
I'm listening to you. I'm about to end the class.
Sorry, I don't get how you get the 20,000 naira, sir, from the depreciation method, sir.
Depreciation.
20,000 naira. 50,000.
Let me explain to him, sir.
5 times that's 20,000, 6,000. I don't get how you
because
get
we have another class now. So, any other question, call me. I will attend to you. Have a good day, class.
Thank you very much, sir.
Thank you very much, sir. Thank you very much, sir. God bless
Class
you.
governor. Class governor.
Yes, I can hear you, sir.
Can you snap the attendance for me, please? Snap the people that are online and send to me.
Okay, I can do it right from here, sir.
Please quickly do. However, snap the attendance and send to me.
Okay, sir. Everybody should still please wait where they are.
Some people have registered the group already, so you won't get the actual number. Actually,
Some people have gone.
Just mute yourself. Bye.
So I'm ending the class now. So have a good day, everybody.
Hello, Yawa. Yawa, good morning.